Hi everyone, and welcome to another Seraphim LinkedIn Live session. Today we're here to talk about the Seraphim Q2 2023 SpaceTech Index. We are pleased to share that investment into SpaceTech is showing signs of recovery after the decline in 2022. Investment activity remains strong and exciting, particularly at the early stages, with a number of seed deals growing almost 55% increase year on year. I'm pleased to introduce our Seraphim investor, Maureen Haverty, who's going to tell you a little bit more. Hi, Maureen.
Hi, Leah. Hi, everyone.
Thank you for joining me today, and thank you to everyone for listening. Maureen's going to be happy to take questions from the audience, so please post them in the chat. And if we don't have time during the conversation, Maureen is happy to go back into LinkedIn and answer them all for you, but we'll go ahead with the questions. So Maureen, how has the space investment landscape changed since Q1? Can you give everyone a bit of a brief overview about what the investment trends are?
Absolutely. So the biggest change we saw from Q1 to Q2 is, I think you're all sick of me saying that Q1 was really the quarter for European investment. European investment was up quite a lot. It overtook the US for the first time. We saw a lot of growth stage deals such as ISAR or ExoTrail. And actually that fell off quite a bit this quarter. US investment is back up, growth is back up in the US. So it's really, I wouldn't quite say a resurgence for the US, but certainly the US is back where investing is happening. And investment in Europe was down quite a bit because people had deployed their growth stage capital in Q1 in those growth stage companies. So that's one of the interesting things that we saw. And also we saw growth stage deals in two countries that tend not to have very large growth stage deals, Canada and Australia. Australia with Fleet Space and Canada with Kepler.
Thank you. And what about some of the highlights from the past year?
From the past year, I think the highlight for me is that we saw those big European growth investments, which is great. That's always been a real difficulty for European companies, their ability to raise growth capital. I think what we saw in Q1 is that may no longer be as true. So that's fantastic. We definitely have seen, declines all throughout 2022 and into early 2023. So the recovery that we're starting to see with the US coming back is really quite exciting.
Great to hear. Thank you. What about personally? What were the most interesting deals that you saw?
Yeah, I think the three growth stage deals that we saw in Q2 that were really exciting and interesting for me were Fleet in Australia. They raised, I think it was about $50 million. That's a really interesting deal because they have their own satellites. They have an IoT constellation, which they use to do mine mapping internationally, in particular for mapping out lithium in lithium mines. Obviously, we know that lithium extraction is a really important and growing industry for electric vehicles. And they've come up with a novel technology that can do in the most remote locations and provide a full end-to-end solution to mines. So they're not selling connectivity, they're selling maps of mineral deposits. And I think that's a really, really productized space company. So I find that really interesting with a great founding team. Kepler in Canada, I've known them for some time, and they're a really interesting company. They're originally doing IoT connectivity for Earth, but actually now they're doing in-space data relay, so internet for space, which has been a really challenging area for companies to get going in. If you have an in-space internet, it means that it's much easier to send data back to Earth quickly. Really important for Earth observation companies, for example. There's a real data bottleneck. We'd love to have that resolved, but it's often been really expensive and companies have struggled to get off the ground. SpaceLink was a really great example that just failed to raise funding to do it, and Kepler are doing it now. They raised 90 million to do so. And then in the largest investment of the quarter was Astranis, who raised $200 million before their most recent launch. Obviously, we know they've had some troubles with their first launch, but hopefully that troubleshooting will go well. They're ready to deploy commercial service, and that's why investors invested $200 million in them. So I think those three are quite interesting examples.
Thank you. Other than growth stage, we've seen an increase in seed deals. Why do you think that is?
I think it's just testament to the fact that people want to start space companies, and companies and VCs want to fund them. Founders, increasingly high quality founders are pursuing larger and larger market opportunities, often with no space background themselves, really problem focused, and VCs are really buying into that. And if you've got more seed deals, it's indicative of the fact that VCs who previously have not invested in space are still continuing to be increasingly interested in it. Seed is a really great way to get it to kind of dip your toes into a new market, and hopefully they're going to like what they see.
And are there more companies that we're seeing?
Yeah, absolutely. So basically, more companies are being founded, and which is great. And then the fact is that they're considered high enough quality, and that's why VCs are willing to invest in them. There is one thing that you could think about that's maybe a slightly negative interpretation of it, is that VCs who maybe traditionally or their remit is to invest at later stage, they don't really have the capital at the moment to deploy into very large growth rounds. They still have enough capital to deploy into seed stage, so they move back earlier into seed stage. I think that's a really, hopefully that recovers. I think it will. And I think it's a great thing that, while the market is in this downturn, and there's no doubt about it, it is in a downturn for everyone in VC, is we can get all of these really great companies started, the market will recover, and then when they've reached their growth stage, VCs will be back investing in a much bigger way.
So is that when you think we'll see growth stage deals improving? Like, is it just literally a market situation?
I think it is a market situation. There's a number of factors that contribute to it, and there's so many factors that contribute to it that it's no one's going to have one correct answer on it. But it's slower for VCs to fundraise right now. Maybe LPs are being a little more conservative. There is obviously the higher interest rate market, which disincentivizes investing in VC. There's some element of companies have money to deploy, but don't want to deploy it until they know when their next fund is coming in. And definitely, there was a number of things that really slowed down investing over the last year. Silicon Valley Bank is just one example that everyone will know about. That meant that people didn't do that much investing. That's where we've had no growth investing. So in space, we're starting to see growth stage investment coming back. I think it's at lower valuations than we saw. It's definitely at lower valuations we saw in 2021. Hopefully that will continue, and it'll probably be a gradual return to growth investing over some time. So in other words, we haven't recovered completely, but it's starting to look a bit more hopeful, and we might be seeing an end in sight right now.
Yeah, I think it makes sense. It's across the board, isn't it? Not just in space. I feel it's everywhere.
Yeah, I think absolutely. Actually, space investing is actually down less. That's really important to note. Space investing is down a lot less than other sectors of VC. I believe when we look back on 2022, space investing was down maybe 25%, but maybe more generalist VC was down more like 45%. So no, space is actually, comparatively speaking, doing quite well. Yeah. And that's to be expected. War in Ukraine, climate focus, etc. We all know space is increasingly important and increasingly revenue generating. So it's going to attract more investment.
Yeah, great stuff. Thank you. In the last 12 months, you've reported that there's been 28 space-related M&As. Can you tell us a little bit more about those and what they mean for the sector?
Yeah, lots of things actually. So one really, I think, big one is that Maxar was taken private. So Maxar was taken private by, I believe, Advent for over $6 billion. That's reflective of Maxar being a public company. Maxar's valuation recovered quite a lot over the last few years, and what can we say about Maxar? Maxar has big contracts to deliver Earth observation data through its acquisition originally of Digital Globe for the US government and international governments. It's doing very well out of Ukraine. It's provided many of the images that you will have seen on the front page of newspapers. Maxar has provided those. And, Advent has taken Maxar private with the hope of increasing revenue, increasing profitability. So I think that's really interesting. The other ones that I think are really interesting is that you will have seen a number of the big communications geo players merge or attempt to merge. So I guess it's Viasat merged. Sorry, I always mix this up because they sound exactly the same. Viasat and Inmarsat merged, or Viasat acquired Inmarsat, and then SES and Intelsat attempted to merge, but that fell through. Why do they want to do that? I just think this is such driven by the threat of SpaceX and Starlink. I think for many years, these geo operators did not think that Starlink was going to be a really serious threat to their business model. And that is not true. Basically, Starlink is providing communications in the most arduous of circumstances, for example, in Ukraine, but is obviously providing really great broadband coverage in more and more countries internationally to consumers and also to enterprise. And I think geo operators are really worried about this. And I think the best way to deal with the threat from Starlink is to merge. So I think that's been something that's been really interesting for me, is seeing these companies attempt to buddy up to take on Starlink.
Yeah, that's really interesting that everyone's seeing them as such a huge threat and trying to, what can they do? Let's see, watch this space.
Mm-hmm.
Why did you decide to add M&A into the index? Because it hasn't been in before.
Yeah, I think it's because we're starting to see more of it. Our trends show that there's increases of it. One of the things that we found that's really interesting when we actually did the analysis is that we're starting to see more of the new space players becoming major acquirers. So I think the top three are Voyager Space, who are a portfolio company of ours, Rocket Lab, and Firefly. So space is reasonably cyclical in the sense that there have been booms of companies being founded at various times throughout, the history of space. And then over time, they consolidate basically into the big primes in the US. So, Lockheed gobbles up everyone, Northrop gobbles up everyone. We're starting to see some of that consolidation right now, but it's interesting that some of these newer players, they're consolidating. Oh, Redwire was another big acquirer. They're starting to be some of the consolidators. So we might see the emergence of some new really big players happening. There's precedent for this in space. L3 Harris was formed from L3 and Harris, and L3 itself was formed as an attempt to, be a consolidator. So I'm excited to see which of Firefly, Rocket Lab, Voyager Space, and Redwire potentially emerge as one of the big new players.
Do you think this is a worry to the primes?
I think in terms of matching size, almost certainly not. These companies, Lockheed, Northrop, Raytheon, they're enormous. They're unfathomably large. So, and the newer players have a long way to go. In terms of competing on individual space deals, absolutely. I think Raytheon, with the new Space Development Agency contracts and constellations, for example, Raytheon didn't win anything in that. And Raytheon's CEO came out and said, yeah, actually, we're finding it hard to compete in this new, very cost schedule driven paradigm. And we need to rethink how we work. And, that's driven by, new space players such as York, who are being really competitive and bidding low cost and fast on some of these constellations. So I think Absolutely. As procurement changes within space, I think these primes will be worried about their ability to compete effectively against some of the faster and more nimble players.
Yeah, interesting. Thank you. And let's talk about geographies now. You obviously mentioned the US earlier, but which geographical region is investing the most in space tech? Invested the most, sorry, in Q2.
In Q2. Oh yeah, sorry. I'll let you finish.
Yes, all right. And are there any new geographies emerging that you have your eye on? You've obviously mentioned Canada and Australia, but I think there's Africa we've seen, and there's all sorts. Explain a bit more.
Yeah. So first of all, yes, US was the largest investor in Q2, and back again, it's always been the largest investor Europe-wise for one quarter this year. So it's definitely the US. Definitely, we'll be seeing more investing in the US. Are there any new emerging geographies? Yeah, Australia has quite an interesting space ecosystem at the moment. There's companies like Fleet, there's companies like Innovar who are really working with the Australian government. There are companies like Gilmore as well, and then Heo Robotics, which is an in-space situational awareness company out of Sydney, who work a lot with international governments. So yeah, that's quite an interesting ecosystem, given that I think it was as recently as 10 years ago, Australia had no satellites, no government interest in space, so interesting to see that a space ecosystem emerge from almost nowhere. I think that Canada is interesting because they have had some fairly major players in space for quite some time. MDA is really one of the bigger players in space, but it's interesting to see that a startup like Kepler, which is now, really, having raised a $90 million round, is, it's a growth stage company, is that's starting to emerge. Africa, we haven't seen any growth stage companies there, but certainly we're tracking the earlier stage startups there. We had our first African company on our accelerator recently, Amini, and I think Africa is a really interesting region because it's a data scarce continent, so has fewer sensors, local data streamed, poor weather forecasting, etc., etc., etc. And space can really provide a lot of those in one fell swoop. And we think we're going to see a lot more space startups who are focused on that, really providing maybe the equivalent of 13 data streams with just satellite data, which I think is exciting.
Yeah, we spoke to I think the head of product from Amini, and it was fascinating on how he was saying that they know like the ground coverage in Africa and how much debris that they have in the trees, and and it's just something that I didn't really ever cross my mind, that you would need someone who really understands kind of the ground level. Yeah, it was really fascinating. So I guess that crossed my mind when you talked about the Australian company as well.
Yeah,
how they're just like in touch with the local surroundings. It makes sense.
Yeah, it's a really known. Sorry, it's I'm lucky enough to work with the Endeavor Network, which is the idea that entrepreneurism exists everywhere, not just Silicon Valley. It's just Silicon Valley network is in Silicon Valley. Let's recreate the network everywhere. And it's really interesting to see all of these amazing local companies that are actually go on to be unicorns, that really leverage their own unique on the ground insights as to what consumers need. So yes, like an African company like Amini, who's like, I know exactly what Kenya needs right now because I'm local to Kenya, is going to have an advantage over, let's say, a US or a European company who's going to come in and just make assumptions.
Yeah, exactly. Yeah, really interesting. What are you expecting to see change moving into Q3, Q4, the rest of the year?
There should be more growth investing. There's definitely obviously a lot of companies out raising growth rounds. All the companies that raised at the end of 2021 really are coming towards the end of their runway now. And also it takes longer the larger the size of your round, the longer it takes. So really they kind of need to be thinking about raising their growth rounds now. So I think we're going to see more growth rounds coming back. if you have to raise a growth round, but no one wants to give you growth funding, or people are really extracting a hard bargain, what that means in effect is that your valuation is going to come down. So I think there, it would be lower valuations unless you've had really amazing progress. I think that's going to be it. I think, it's not really a change to say, I think we're going to continue to see more and more companies being formed. Like, it's not a change now, it's just a trend. There's just more and more space companies being formed. So
what particular sectors are you predicting?
We're really big on space life sciences. We invested in Atmos. I just invested in Atmos a couple of months ago. They're a free flyer in return, targeted at life sciences R&D. So atmospheric reentry, free life sciences, and we consider that one of the enabling technologies for life sciences. And I think you'll see more from us on life sciences, and we see a lot of space life sciences companies seeking investment now at the seed stage. For those of you that don't know, it's really interesting. View materials, tissue, molecules all behave differently in microgravity. No surprise, if you remove gravity, things behave differently. That has implications for materials, how crystals form, how proteins fold. And there's a lot of research that has been done and continues to be done on the International Space Station related to life sciences that you can then apply the technology back on Earth. Life sciences was one of the key areas for that. And we are tracking and really interested in companies that are developing companies with potentially huge markets using that research.
That's really fascinating. That's real science fiction into science fact. Is there anything? Yeah. Is there anything that's really surprised you that you weren't expecting, or is it all according to plan?
No, definitely. I don't think for anyone 2022 has gone according to plan. I think one really pleasant surprise is that at the seed and Series A, and even up to Series B, I think that once companies have worked out what the right round size is for their company and the right valuation, rounds are actually closing really quickly and rounds are actually oversubscribed. Whereas I don't think, I think that kind of caught us by surprise that, for, a year almost, oh, there's no investing, come back and talk to me when you've pulled together a lead. And actually now, there's momentum. There's real momentum around, early stage companies, provided, they've got the right size round. They're trying to raise the right size round for where the business is right now and the valuation is sensible. Those rounds are closing, they're closing quickly, and they're oversubscribed. And that's a very pleasant surprise.
Well, that's exciting. And we're pleased. I'm sure everyone's pleased in the industry is pleased to hear that everything looks like it's on the up. We'll take a couple of questions now from the audience. So if anyone's got a few, we're running almost out of time, so we started a little bit late, but let me just take one on government funding.
Yeah. So state of government funding right now in the foreseeable future. Yeah, so the UK Space Agency, I think 15 million for Earth observation, I think 150 million for communications and 5G from LEO. Yeah, I think government funding is going to increase. I think it's different in different countries. Some countries prefer to do grants. Some countries prefer to give contracts. I would prefer if they gave contracts. That's recognized revenue for companies. It teaches them to behave more like just a profitable business. And some companies, either through their sovereign wealth funds or direct investments, are investing into space. Into startups? Why are they doing all of that? Because they think that space is a critical asset. I think it's actually just designated as a critical asset and critical infrastructure in the US. Space is necessary for how we live now. Space is necessary for how we plan to live and improve our lives in the future. And governments are backing that. Absolutely.
That's great to hear. Someone's asked about how important, I think he's trying to say climate data, like reliable climate data is, and I mean, that's hugely important.
It's one of the kind of almost the theses of our fund. One interesting company to look at might be, as an example, is Renoster. So they do carbon credit verification, which we think is really important. We're big on the idea of the data itself has to be accurate, and and we use space to make sure the data is accurate and high quality, and then we can go and model and junk data in, junk information out. So we're really big on the potential for space to verify estimates and make sure we've got accurate data.
Yeah, very important. Well, I think that might be all of the questions, which is great, and we're 3 minutes over. But if anyone else has anything that they want to ask, please, as I said, post them in the chat. And Maureen, I'm sure she's very busy, but when she has time, she'll come in. She'll come in and answer them for you. But thank you, Maureen, for joining me today.
Yeah, thanks, Leah. Thanks everyone for listening.
Thanks. Bye.
Bye.